All right, good afternoon, everybody. Let's jump in. I am an associated member of. You guys can hear me, right? Just want to make sure I had to replug in this microphone earlier. Can you guys hear me or no? Anybody out there? Yes. Thanks, Rich. All right. I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRECIPIC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is roughly the same. I no longer have a NVIDIA position on. Thanks, Robert. Thanks, TT, Ubixi. Cool. So, I don't know. Kind of a nothing much day today. Josh, please. I can't with your jokes. The SPYs are trading down a little bit from where they closed, but the SPYs basically closed flat on the day. The Qs are also trading down about 40 cents from where they closed to be pretty much flat on the day. And the IWM was relatively weak again, down 0.5%, despite the TLT. Well, I guess the TLT actually only closed flat. I thought it was up a little bit. Spent a good portion of the day today up, then it was down, and then it bounced back a little bit into the afternoon, but also closing flat. Let's take a quick look at the RSP. The RSP's been telling the story these last couple of days. The equal-weighted S&P is also down 0.5%. So these last couple of days in particular, it's really felt like there's just been a couple mega cap tech stocks that have been holding up the entire index. Yesterday it was NVIDIA. Today it was Microsoft. Microsoft had a big day today, breaking through that 420 inflection point that we spent so much time talking about to close up 2% on the day. Let's take a look at our technicals here to see if there's much to talk about. So we had a gap down this morning. The gap down this morning was interesting. I thought that there was a chance that we could really hold below yesterday's low, break below yesterday's low, and there's some importance to yesterday's low. So if we lost yesterday's low, I thought we could get some real downside continuation, but we didn't. We opened up basically right at yesterday's low, tick below it real quick in the first 5 minutes. It doesn't matter because you got extension. It's not just like a tick below a level that matters, or in this case, a tick below yesterday's low that matters. It's, are we holding below, especially after our equilibrium area on that time frame catches up. So when you have a big gap down like this, it creates opening downside extension on the small time frame that typically needs to be satisfied through time or through price. This was kind of a time end price correction for 35 minutes before the ADMA caught up on that gap down, but then pretty quickly after that the market actually broke up. So we were never able to get below yesterday's low for the SPYs after equilibrium caught up, which is when it would matter. The Qs never got below yesterday's low at all. So severe E. coli outbreaks linked to McDonald's. Thanks, Bill. Is that moving McDonald's at all? I'm curious. I remember when it is. Wow, I remember when that crushed Chipotle years ago. It ended up leading to a huge buying opportunity. McDonald's getting crushed on the E. coli stuff. I wonder if I can even find that in the chart of Chipotle. Does anyone remember that the big E. coli breakout situation? I can't find it in the chart. Yeah, a few people do. I'm not sure what year that was. I wonder if that was this move here at the end of 2015. I mean, I just remember it destroying the stock for like a while. It was a big deal. I don't remember when exactly it was though. Maybe it was all backlist volume. Could that have been as long ago as 2012? Wow, it was really that long ago, like 2012, 13. It would make sense. Looking at the chart, it looks like it could have been a 2012 story. I'm totally getting off focus of our normal afternoon meeting here with that headline. I think that this was it. This move here in 2012, and they destroyed the stock. Wow, look at this. Split adjusted Chipotle, $8. Made a low of $4.70. Here we are today at 60. Anyway, getting completely off topic as McDonald's is getting wrecked down. Let's go back to our review of what the indexes did today. So we never broke below yesterday's low. That's the first trigger that I'm looking for from an index perspective is this SPY 580.60, $580.60. Where if we lose that, I think you could look at a test of this 21 EMA or a test of the 574.50, which is the really important level that we broke out from back here on October 9th. But we held yesterday's low, so there was no downside follow through. And the Qs also held yesterday's low. And the IWM was relatively weak. The average stock that was out there was really weak. I don't know if anybody has the breadth numbers, but I would assume that you're looking at a SPY that's flat on the day. It's not going to be like 50% of the S&P was green and 50% of the S&P was red. If I had to take a guess, I would guess that 75% of the S&P was red and 25% of the S&P was green today. It's not a market that I like, to be honest. We've dealt with this the last couple of days when there's just no participation. Nvidia seemed to be the only thing that was going up at certain points yesterday. Microsoft seemed like it was the only thing that was going up at certain points today, outside of a few select earnings names like with what General Motors did. But those companies, the market cap of them is so big that it can hold up the entire S&P and the entire NASDAQ. So the SPYs are still, fully in this kind of consolidation area. They haven't broken out above 585. Bulls want to see them negate this candle from 1017 and get above 585. Bears want to see you lose the low that I just referenced and eventually retest and potentially lose the 574.50. Qs, it's kind of the same deal. We're just still hanging out in this consolidation area. If you're bullish, you want confirmation of a negation of these two negative Maribozus. The more important one probably being October 15th, which is the day that the ASML earnings leaked and wrecked down all the semiconductor stocks. And if you're bearish, you're still looking for these negative Maribozus to lead to more of a price correction on the downside, which it just seems like this market can't break. It doesn't matter if interest rates are going through the roof. It doesn't matter if the dollar is ripping higher, which it has been. This move on the dollar, it's so crazy when you look at some of this stuff right now. This is usually destabilizing on the market to get this far, this fast of a move on the dollar, as is this big of an interest rate move higher. It's usually destabilizing on the market. And on top of that, you've got this VIX, which is still elevated. With that said, the VIX closed a little weak today, and I thought that one of the most interesting things of the day was when Bill posted the bearish VIX options trade. Bill, I don't remember all the details of it, like when it expires or how that trade was manifested, but we saw I think a pretty bearish VIX options trade for like $13 or something, which is looking for an unwinding, I guess, of the elevated VIX post the election, which traditionally, in the same way that the market typically rips higher after an election occurs, presidential election, the VIX usually also kind of crushes down. The most interesting thing about this election cycle to me is that previously, for every other presidential election cycle I've ever traded, the market's traded down and the VIX is traded up. And then after the election, doesn't matter, like I keep saying, doesn't matter who wins, doesn't matter which side wins traditionally, the market then rips higher because we're past the uncertainty and the VIX comes all the way down. This has been interesting because the VIX still has moved higher. It's been trading very elevated, especially for a market that is sitting at highs and has not been giving significant movements. But the market itself never actually gave that that break lower. So, kind of an interesting environment that we're in, and an interesting trade to look for that unwinding of the VIX trade after the election. And I still kind of think, like, if this market is going to break lower, which is definitely an if, the uptrend is fully intact, if this market is going to break lower, then it needs to do that in this window here. Like, it's got to get started this week, ideally. Next week, the closer you get to the election, I think the more difficult that becomes. And then after the election, a lot of those hedges that the market participants have on to hedge the election risk may need to be unwound, which could potentially rip the market even higher. So interesting. Yeah, I'll just leave it at that. As far as individual trades go, again, kind of a nothing day to day from an index level. When you look at the SPYs and the Qs, there's really no major updates. We're still in our consolidation. The IWM didn't really give us too much either, even though it was relatively weak. It just continued to pull deeper into the equilibrium area. From a trading perspective, it's funny. My best two names of the day are both day trades. That doesn't happen very often. But I was looking at Baidu, I mentioned in the morning meeting today. So this was a focus of mine. The Baidu, and I just moved my Baidu is interesting because we looked at in the morning meeting today. It was just the relative weakness of Baidu, which is usually not something that you want to buy. We kind of looked at, like, if you look at the FXI or JD or Alibaba or really any of those names, most of them have only pulled back, eyeballing it about 50% of the breakout from the China stimulus announcement that happened back in September. So like this FXI broke out from 27, it went all the way up to 37.50, pulled back, as low as about $31. Now it's trading at about 32. Or if you look at Alibaba, broke out at 85, went to 117.50, pulled back to $100. So also, about a 50% retracement. JD actually a little bit better. Broke out from like 27.50, 28, went all the way to 48, has pulled back to 39, not even a 50% retracement. But Baidu, for whatever reason, and I usually kind of put all those stocks together. I know Alibaba and JD tend to be a little bit more of a trading focus for me. But Baidu, I would lump together as one of these, Chinese major companies, which I think is very different from some of those small companies that you got to be a little careful with. Sometimes they can be a bit scammy. This Baidu basically broke out from $90, went all the way up to 116, and then today retested $90. So on the one hand, I don't like buying relative weakness. On the other hand, it's actually starting to get oversold into an important level. So Baidu was a big trading focus for me today. We caught this really nice move higher. My final target on my piece was actually $93. I had an offer out of $93 to exit. The high of the day was $92.90. I should have had a risk reward stop in off of that, but I honestly wasn't paying attention to it because it was only my last piece in the stock, and I was really focused on NVIDIA at that time. And then this thing rolled down, so I just ended up liquidating my final remaining position into the close. But that ended up being my best name on the day. My second best name on the day is actually NVIDIA short, believe it or not. It was tricky, though. It was tough. I took a whole bunch of trades in it and had a few trades that were failures in it early on in the day. Had one trade that worked. And then was able to capture this down move, but I talked about it in real time. I was really adding through this 143.30 on the downside for this break lower. That's been one of the things that I've been trying to improve on that haven't traditionally been good at with my own trading, is like adding down on a short or adding up on a long to try to get some extra juice when the momentum changes. So the stock felt pretty heavy to me in that area and kind of created this support into this 143.30 right in front of the 21 EMA. And you can see that there's like three tails in a row here into that 143.30. So after the third one, I was like, all right, I'm going to put the third test of that 143.30. I was like, all right, I'm going to put a sell stop at 143.30 for momentum downside continuation, basically to see if I can get that, to see if this thing can break lower. And it worked great. Totally broke through the level as I was looking for it. Then there was a quick snapback on this 1040 candle, and I actually added again, not an add back, an actual add. I added into when I put in the 143.40 high and was working lower again. I was able to add like 143.22, I think. So I took two adds. big on size, and then this thing crushed down. I covered most of those more momentum ads, and then was kind of back into a core position. I tightened up my stop on that and just decided to use the high of this 1040 candle. I kind of wanted to be a little bit looser with that core position, but I had to go to a doctor's appointment midday today, so I was gone for 2.5 hours, and just not one that I want to be in if I can't be in front of the screens properly managing it. So I tightened my stop up just to this high of the 1040 candle, got stopped out of it at about 11 o'clock, and then I grabbed some lunch and went up to the doctor's office and missed most of this price action. But it looked like it stayed really weak, even when the Qs ripped higher. And I don't. Someone please let me know. I don't think that there was any news in this up move, right? I think this was just kind of a technical break higher that then faded back down. I missed most of that move. I got back to my desk just after 2 o'clock, so I missed this kind of break higher. But even when the Qs broke higher, NVIDIA didn't really participate. It didn't go after new highs. It just worked its way back to that 144. So interesting to see that NVIDIA was a little bit heavier, but overall this chart looks super bullish still. You know, big day 2 days ago, a little bit of digestion today, maybe a tiny bit of relative weakness. It looks set for continuation. So that was a good one. I scalped this OKLO a couple times today, made a couple dollars. I was not involved in Microsoft. Microsoft was probably the best one out there, just from a day trading perspective. Just that's where the relative strength was, and that's pretty much all that I've got. I ended up not trading any of those earnings plays. Verizon did hold the 4280 level. RTX was very surprisingly a huge failure to me. I thought the report was great. I thought the technicals looked great. That one failed all the way down, but I didn't trade it. Triple M also failed all the way down. I'm not as surprised to see that. I didn't like that earnings report that much, but it was trading up at that big 140 level. And then GM was, trading really sloppy pre-market, and then woke up when the market actually opened and traded great. After hours, we've got Texas Instruments is reported, TXN. So TXN is, what's this thing doing? Nothing. It's trading right about exactly where it closed. TXN, sometimes I call it like the forgotten semiconductor stock. It looks like their revenue guidance is a small miss. 3.7 billion to 4 billion versus estimates of 4.08 billion. Fourth quarter EPS guidance is also a miss. I'm actually surprised that this thing isn't down more. TXN. It probably doesn't have as much juice built into it as NVIDIA or some of the other names. We have Seagate here out after hours. Seagate's trading lower a little bit. We have Starbucks out. Starbucks looks like they are withdrawing their guidance for fiscal year 25. Markets usually don't like that. Nike had done the same thing. The market didn't like it. Trying to say that they're working their way through a transition with a new CEO. Looks like Starbucks is trying to say the same thing here. All right, that's all that I've got. I am happy to take a look at anything that you guys have. Rich giving us some information on the Chipotle fine, $25 million fine from 1,100 cases of foodborne illness. Thanks, Rich. What do you guys got for me? I'm happy to answer any questions that anybody may have. I know it's a little bit of a slower day today, but I'm happy to help. In the YouTube, I'm seeing from Robert, Qs start breaking when Microsoft was breaking the lunch consolidation to the upside. Yeah, so every day it's one stock that seems to be doing it. From Michael Z, does the pending Israel strike on Iran figure into your risk management? No, not directly, Michael. There have been kind of constant impending attacks, I think, between Iran and Israel for weeks now, and the technicals have held in just fine. The market, just from an index market related perspective, obviously it's a charity. It's a catastrophe that the event is happening and war is terrible and we don't want that to occur. But from a market perspective, the market hasn't cared at all, and I don't see the market even beginning to care at any point in the future unless this thing really begins to escalate into more like a World War III situation. And that's probably also part of the reason why the VIX is as high as it is. There's plenty of reasons for market participants to have hedges on, yet what we started to see as the SPYs are breaking higher is that those hedges are only being a performance drag, which is then causing some of these hedge funds to actually have to chase price up a little bit. So for me, I've had broader market concerns that I've been discussing for like a month now. None of those have come to fruition. They're, related to everything that's happening. To some degree, war, but, I feel like over the course of my trading career, war has been ongoing more often than it hasn't been, unfortunately. If you look even at like the Russia-Ukraine thing, it did create a lot of initial volatility, especially in the commodity space, but then the market got through it. I'm more hedged because of seasonality, honestly, than any actual impending risk related to geopolitics or even to some degree related to the presidential election itself. So I have my concerns. I've been saying for a while that there are these warning signals that are out there, but none of them have manifested into anything. Those warning signals are the interest rate move. Those warning signals are the dollar move. Those warning signals are the elevated VIX. Those warning signals were NVIDIA not being able to get above 140, but that one's gone. There's warning signals technically with this negative Maribozu on the 15th and this follow-up kind of negative Maribozu on the 17th. Once those get negated, though, then those will be off the table as well. So there's a lot of warning signals that are out there, and there's a period of time here that tends to be weak seasonally into these presidential elections. So it hasn't been like a hedge, but thinking about it from a risk management perspective, I have not been gung-ho long like I usually am. It was funny, if anybody watched me on Benzinga this morning, at the end, the one moderator basically made a comment like, it's so great to have Derrick on the show and to give us like his like, I don't remember what his exact words were, but he kind of implied that I'm like a consistent bear, which I thought was funny, and I was hoping that I wasn't giving that message across. I'm not a consistent bear. More times than not, I'm bullish. If I'm accused of anything, I probably tend to be overly optimistic. But I'm also kind of a realist, and I've learned that there's certain aspects of seasonality that are really important. So I've been trying to not be overly long this market. I've been trying to have shorts and longs on at the same time. My biggest individual position by far is my QQQ short. You said contrarian view. Yes, thank you. I mean, contrarian view would mean that I'm a contrarian and it's a bull market, so I'm really bearish. But I am oftentimes an advocate of just trading in the direction that the market itself is actually trading, because I think that that's usually the easiest money. That's trend following. The easiest way to make money, I really think, is by following the trend. And then the times that we want to not follow the trend are when there's overwhelming evidence, or when they're basically in periods of extreme. Like when you get that extreme last leg higher or lower in the trend, that's really where you want to then become a contrarian. But I'm definitely not like a perma bear or anything like that. If I was a perma bear, I probably wouldn't be in the business. But with this market, with everything that's going on, and the technical warning signals I just described, I have not been anywhere near as long as I kind of have been from October, beginning of November last year all the way through this summer. And I've been really leaning in on trying to keep this QQQ short, which I've been short these Qs for a while. It's a T triple Q position. I wonder if I can even figure out where I'm in from if I do it real quick. I have to bring up a calculator to figure it out. No, that's not Covering for 50. Doesn't make sense. I am probably short from like initially as a very small position, like $65 in the teachable queue. Yet here we are at $75, and I'm actually still positive in it, which has been the thing that's been able me to keep the trade, as I've been trading it well enough throughout all of this that even though it's overall moved $10 against me, I'm still positive in it. But I have been getting heavier overall as this thing's been moving up as well. So we'll see. Once we can get into the November period, I start to turn increasingly bullish. It's just getting through this period here these next couple of weeks. So that's kind of, anyway, like a long-winded answer. That's kind of how I'm thinking about risk management. It's not just the geopolitics. It's everything that's on the table. But even more than that, it's like some of these technical warning signals that I feel like I've been looking at that haven't allowed for any market breakdown at the same time, though. From Noah Schultz in the YouTube on Starbucks. Starbucks is a bank that sells coffee. Over $1 billion in prepaid rewards. A loan from customers at 0%. Yeah, it's a great business, gift cards, isn't it? I'm not really a big Starbucks person, but there was a long time when my aunt would give me like a $20 Starbucks card like every birthday or whatever, and I would just load them up on my phone on the app, and then on the very rare occasion that I go to Starbucks, I felt like I've had unlimited Starbucks, but some of that, I don't think my aunt's given me one of those gift cards in 5 years. So that just shows you exactly what you're talking about there, Noah. Cool. Anybody else have anything for today? I know it was a quiet day. I'm not seeing a lot of questions. I'm happy to wrap it up, but I'm also not in a rush to get anywhere. So if anybody has questions about anything related to their trading, I'm happy to help as well. Going once. Going twice. Sold. All right. Have a wonderful evening, everybody. I will see you all tomorrow morning.